Years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we're going to talk about, even though we had a decent down day, it appears to me that the markets are still ignoring the reality of the situation we're in. Also, don't be confused tonight. You get the Substack. I'm in the process of finishing a special report on crude oil. There's a lot of things I think that need to be said. I kind of touched on in last night's video. So let's get into today's video. Well, welcome everyone. We're starting to get some pretty decent action on the markets. We're seeing the sell-off. I talked about last night that we were probably going to have to retest that Monday low. We've got plenty of numbers coming out tomorrow, but we're now seeing the markets turning negative on the year. S&P down 2.5%, NASDAQ down 4%, Dow Jones down 2.9%, and Russell's hanging on 0.3 plus, and the mid cap is 1.2%. So we're seeing this effect starting to happen. I think you'll find my report on the oil interesting, because I went into depth as I usually do. I think it's 12 pages long, probably a 20-minute plus read. But I don't know how to do things short. But it's a good report because it points out what we're about to deal with. Everyone thinks that the bullets are going to stop flinging around and it's going to be okay. It is not. That we are into something much, much larger. It's something I talked about in previous broadcasts, talked about in the Substack as well. And it is that, it would take like a black swan or unexpected event, because as things were set up for 2026, and we still may have a positive year. I'm not calling for anything, but I am going to mention something that came up in mind while I was preparing for the show. But we're really starting to see some more reality coming in. Every day things get a little more revealed, little by little. And, if anyone thinks that, $97 crude is good, then please raise your hand now. And I don't think this has got a good ending at the moment. So this was the synapse. I'll share this with you. And I'm telling you, there is a ton of risk just because of the markets. I have always said this, cannot chew gum and walk at the same time. They can focus on one thing at a time. And I'm not sure what they're focused on right now, because I think this crude oil story, it's being presented by the administration, by Trump and everyone else, that this is just a one-off thing. It's just going to go away. When you see the report that I wrote and read through it, there is a lot of implications here, and these are not things that I'm talking about that might happen. These are things that have already happened. Okay, I was thinking about, I shared with you just a week ago or so, I get these weird feelings. Margin Call was a 2008 disaster movie, right, with Kevin Spacey and Demi Moore. I forget who else is in there, but one of my favorite movies. Well, I watched it last week. I started getting these intuitive feelings. I'm going to tell you a quick story about intuitive feelings, and because it's a special thing. I was reading some stuff. I've got a buddy. I'm trying to put a podcast together. A former professor and a good friend from long ago, from like 30 years ago, and but. There was a thing, if any of you have read the Market Wizards books, there was a guy in there, Ed Sakota, and I got invited by a group. There was a guy named Hank that was there, and he was another professor from the same college, and we got invited up. There were 10 of us that went to Ed Secoda's house. He lived in Lake Tahoe. I was in the Bay Area. This is going to go really quick, but it's an interesting thing because I used some techniques from that meeting in our old office, and especially with our two commercial groups, hedge on gold and oil that used to run. But real quick here is one of the things that we discovered when you're kind of going through scenarios and when markets aren't acting as if they should be, is that all of a sudden the market wakes up one day and has an aha moment. And I was in the Bay Area, so there has been a couple Friday the 13th. We've had 2 Friday the 13th. Okay, I'm going to bring Bob's trading superstition into the room, but there were 2 Friday the 13th last month and this one, which is tomorrow. And I was flashing back when 1989, Friday the 13th, 1989, October, not only did the markets crash, we call it the mini crash after the 87 crash. And 4 days later, we had earthquake in the Bay Area. It was at, if you remember the World Series, I think it was Game 3. I had like 8 of my guys that work with me at my office and my firm were at that game. And I was at Game 4 because I think the A's swept in 4 that year. But anyway, to make a long story short, tomorrow's the 13th, and I just thought about, markets are not paying attention, and I still think crude oil is driving the sentiment, but it's not driving it at the level I thought. So I think the markets are looking vulnerable to more downside. We'll go through that here in just a couple minutes, but I think more importantly, I don't see a lot of reality. And even when you turn on the TV, I turn on Bloomberg for a little bit every day, as long as I'll watch a couple segments there. So just be on alert. Make sure you get yourself covered, because I'm going to show you in a minute, our database went to full liquidation mode tonight. And we're 1 day away. Tomorrow night we'll run our intermediate models. They're at 54%. They could drop under 48 easily. We could get another big tranche of selling coming in. And we had one of our models that run off the stats and Portfolio Expert went to cash on Monday. So there's a lot of things going on that I'm just trying to make sure people are aware of, that there's not a bounce coming. I'm just putting it out there as karma. 2 Friday the 13th in a row. I hate Friday the 13th. It's really funny. I won't go there. I have multiple events that were significant and not good happen on Friday the 13th. So anyway, that's a number. If you know anything about floor traders and people, that's a lot of us are superstition. I have one guy, a buddy of mine, wore the same tie for like 10 years because he made a bunch of money one day. He was afraid to come down on the floor without that tie on. Anyway, so it's just part of the stuff. Our room's still filling up. I got to tell one more story because I'm in a story mode tonight. Is a buddy of mine, Steve, on the CBOT back in the day. Another buddy, he was a trader in the bean pit on the CBOT. This is another give me 2 minutes and the room will fill up and we'll get dead into some serious stuff. But it's just kind of funny setting here and the earthquake and the Friday the 13th, it was like hammered. Our phone lines were down. We couldn't get orders in on that Tuesday. Anyway, so Steve, a buddy of his, comes in the floor and he's just shaking his head. He goes, "Man, I've been just losing so much money. I'd like to I don't use foul language on this channel, but I would love to right now." But anyway, he says, "I bought this black Ferrari and I'm losing money. I can't make any money. I bought the car like 3 weeks ago. I'm losing my butt. And Steve is like, if you saw this guy, he's the funniest guy in the whole world. And he's like, it isn't the damn car. The car's not causing you to lose money. He goes, I'm telling you, man, I'm getting rid of it. He goes, I'll buy it from you. So he buys the Ferrari from this guy. The next 2 months, he can't make a good trade if he tried. And so he was telling the story. He's spreading the story. Now there's multiple people talking about this black Ferrari. Another guy says, screw you guys, I'll buy the car from you. He loses money for 2 months. And then they got together as a group and said, nobody on this floor can buy that black Ferrari. And so I always tell that story, the black Ferrari. And I would love to tell it in a much more realistic and colorful moment that was shared with it, because these guys got hammered in the markets after they bought this car. So anyway, all right, on to reality, folks. So superstition and old Ferrari stories tonight to start the channel. So enjoy. So yeah, a lot of things are happening though, and they're starting to fall in place, and it goes back. The other Friday the 13th before a crash was in 2020. So I don't know. I'm putting it out there. Just make sure you're covered up. We've got a fair amount of cash in our portfolios, not as much as I feel like I would like to have, and maybe nothing happens here. But what is happening is this war, this oil story, is very material. It's got me to the point when I know it's sort of like the silver special report. I had some feelings about silver that came up, and that ended up being spot on, and then some other stuff. So I kind of operate out of this superstition intuitive world. One of the guys that was senior partner at this hedge fund I worked with in San Francisco, he had a superstitious moment in 1987 and ended up surviving because of it. So, like I said, if you hang around a bunch of old floor guys, where you're gonna hear stories like this. So, for whatever it's worth, I spread the old folklore of the analog world, and so anyway, I just see a lot of things lining up here that are concerning, and I'm going to let you read that article, and we'll talk about it next week. This is a final broadcast for this week, but we'll talk about it next week, and we'll just see where we are, and I'll be out there on Twitter or something. Anything's going on tomorrow, maybe. I'm not sure what my day looks like tomorrow, but if I'm around, maybe I'll light up the screen if there is crazy things going on. But this oil story is not over. The war is not over. I don't give a crap what Trump says. It's all over. It doesn't matter. He's gaslighting. And as I said last night, the fact that they put, they're giving all these reserves out, that's one of the things that I emphasize. I get this oil report in my head, so bear with me, is that, when they relieve these things, unless you can psychologically, like Biden did the release right before the election, right, to get gas prices down. But there was nothing going on in the world. It was different. And I think the conclusion I came up with, this release is a psychological release, because anybody that's smart enough, and Scott Bassett is smart enough to know what I'm about to say, and I know he's probably walked into Trump's office in the Oval and said that what I'm about to say is this is going to disrupt the supply chain. It's going to change the world how the world's organized. You're going to see Russia selling oil because they're going to need it. And there's a lot of things that are going to happen here. Not saying any of this, it has probably been broken, and it's hiding behind the facade of the war right now, my opinion. And so, we saw some decent selling today. We're up 25 handles right now, so they're rebounding. But we've been seeing this every night. This is kind of the way the market's traded in the last several days anyway. But this is also I mean, I have to bear with me just 1 second while I bring something up. Yeah, I'm looking. It's pulled back in a little bit, but we're looking at right now 90 last trade 95.24 on WTI. Okay, that that's a bit. That's a lot, and it's not 65. So anyway, I'm going to leave it alone because I am. Yeah, let's see. I see a comment. Yeah, Floyd. He's right. Most people. Oh, yeah, yeah. I think 2020 was pretty good. That was when they pulled the rug on that one. That was a pretty good sell-off. But 87 was special, but it was also the analog days and the way the markets traded. Digital is much different. So, and I'm not predicting. I'm just telling you. I shared when I watched. I start watching Margin Call. There's some. Oh, I wanted to tell you about the thing that happened. I'm sorry. I'm all over tonight. It's okay. It's the last show. I didn't finish the Tahoe story. So the Tahoe story at Ed Secota's house, we went around, and what came up with is you are, including watching what you're doing right now, you are the result of everything you look at concerning the markets, positive, negative, and what happens. This is what I wanted to share with you that's very powerful, is I want you guys to journal, you guys and gals, to journal when you have hunches about the markets. So this is a hunch. And then what happens is you look at your hunches like I see, let's see if he's out here now, right now, but one of these guys, Iron Trader or something, though everything he posts here are his hunches. And that's okay. Those are good things. I'm not criticizing it. But those hunches, then you have to go back and you journal what the outcome of your hunches were. So you start, and this is one of the things I taught in my old live trading room, was how to fade yourself. So if you're always right, then you're amazing. But if you're always wrong, you're equally amazing because you fade. Every time you're bullish, you fade it, okay? And so what happened out of that meeting, there were 10 traders that came from all over the country, managing director, Bear Stearns, all kinds of people, professors, and we went around in this circle and shared a bunch of stuff. Maybe I should do a video on that movie, on that meeting, because there's a lot. I got a lot out of that meeting. Originally, when I did it, I didn't think I did. But what came out of this is that the subconscious, your hunches are subconscious. So they are what you read, what you watch, everything that you interact, your charts you look at. So those are creating this subconscious hunches. And all you have to do is figure out if you're right or wrong. So you journal them. And if you're always wrong, then just know you've got the ticket. You just learn how to fade yourself. Sometimes maybe you're half and half, but you can figure out certain types of things when you watch decisions. I don't know how active people on this channel are. I live and breathe this stuff every day. I have for decades. And I get a lot of hunches. And one of the things I've noticed since the GFC, going back to 2008, I tend to watch, The Big Short and Margin Call and different movies, era movies that were about those things. So it's kind of interesting. So that's why I brought it up a couple of weeks ago. All of a sudden the markets start to come in, databases in full liquidation mode, and here we are all hanging out and talking about this stuff. So let's all right, so let's get in. Tonight I'm going to go through the database. Like I said, I've already given away the punchline that we are in full liquidation mode. We're going to talk a bit about what's likely to occur tomorrow in the intermediate, and then we're going to talk about some of these other events and see if we can detect anything. And the other thing that I've taught you folks who've been around this channel for years is that reverse fundamentals. Right now, the markets, why would you be rallying 27 handles right now? I know we were down at over 1% today, but why would you be buying this right now with crude, printing where it is, So that's kind of my defying the reality, or maybe defying gravity. I don't. And the interesting thing also is there's a lot of support just below this market, and it's legit from a quantitative, from a TA viewpoint, it's legit. But man, you just see things when if you have, it's not like bullish setup. Not when I see my database go into full liquidation mode. It's not like, but the PPMs, the angle of attack that we'll go through here in a minute, all those things are positive to the point, but they're starting to show signs as cracks, we'll say. All right, let's just get into the database here. Nice. My buttons aren't working, so that always makes it fun. Thought I tested them ahead of time, but here we go. All right, so here we go. 19.29, 22 is anything under 22 is the full liquidation mode. We had another 1,000 exits after today. There's not many thousands left. You can see over here. Right now we got 2,736 symbols long. And, we're seeing also the treasuries printing 427. I'll get going here. I spent 21 minutes on telling stories, but hopefully you enjoyed them. I've got tons of those things. I could do a whole show just on trading floor stories. Maybe that would be fun to do. I need to bring a couple old buddies on and we could hang out and laugh. And it would be fun to interact with some folks that were around in the day. And I have friends that were. But anyway, what we're looking at is 1,000 cells. We're down to 19. There's not much left, and I'm not sure. I need to go through, and this is ultimately when I get the door open on the database, and I can throw it. I can have the LMMs maybe put Claude or build something in Claude code to go through and sort through, so we can break down what's left and what's holding, and bring in some more depth other than a number 2756. Like we know right now. Let me see something. Yeah, interesting. The only sector left in is energy on a short-term basis, and it's up 22%. I wonder if I could bring up something. I'm looking up. I have a PC. I have 4 monitors here, so I got 2 monitors PC up, and that's a trading environment up there, and then Mac across this way. So, what I was just thinking, it'd be interesting. I'll look at it. Might be able to get it on. Maybe we take a little break. I'll put another screen on that you guys can watch. But we built, and I know some folks. I see some names on this sheet here in the comments that were there. But we built a energy. As a group, we all picked energy stocks and built a portfolio, and Portfolio Expert back in the day that was just energy stocks, because I think it was probably the easiest trade out there. I think it was probably 22, maybe 23 when we built that. I used to have a live trading room that I did 3 days a week, and we built this thing from there, and it's screaming again. And it was basically, we did what we call an ETF hack, where we went into an ETF, got the constituent list, and just went through all the models on different stocks and picked some stocks to put in that portfolio, and it's done pretty well again. So so maybe I can pull that up. That might be fun to look at. It'll focus, and then somebody had talked about a war portfolio. The war portfolio is cash. It's easy. Get out. Don't try to be a hero in this stuff. There's going to be some good trades, but we'll go from there. So let's talk about tomorrow's run on Friday. So intermediate right now, 54.74. we have 7,762 symbols long. And when we look at the sectors, there's one sector that's probably vulnerable here, which is capital goods. That was one of the first ones to go. So I think that's on the watch list, meaning this is probably going to be an exit on capital goods. So if you have WaveTech, you can drill down on capital goods. You can go to capital goods, and then you get the different sectors, and you can look at aerospace and defense is probably fairly bullish, and it'll show you every stock that's long and the P&L and all kinds of stuff on this. So, but if we go back and just go to the intermediate models here, there's a few sectors. That's really the only sector that's long in the tooth. There's some that have performed well that might be pullback. I don't expect to see a lot of movement in the sectors, but right now we could see the number. I remember a couple of weeks ago I told you watch at 61%, and that was a key number that broke down last week. So now we're watching 48% on the intermediate database. I'll post this up on X at some stage after tomorrow night's run, probably Saturday or something. But before the open on Monday, you'll have context there. But this is this is the next level of the WaveTech environment that is going to tell us more things are going on. So we already broke through 61. We've been up to 68%. That's full invested. Now we're going into a neutral. Anything above 42 is neutral, but there's going to be more vulnerability under 48. We're probably heading to 42 unless we get some reason that I'm wrong on just everything I'm talking about, and this crude situation gets fixed in 3 days, which it's not going to. There's actually the wrong boats are in the Gulf, and the other ones that are in the Gulf shouldn't be in there. So it's not just about the war and getting in through the Strait of Hormuz. It's not just that. It's much, much more. I'm anxious for the feedback on this report I put together. It'll be out in the next several hours. I literally have it like 80% ready. It's final edit, adding graphics, a couple other things, and it'll just be how much energy I have left after this stream. So you might get 2 Substacks. If you don't have the Substack, Kindle Report, KENDALL report.substack.com. So $8 a month. Get at least 2 trades per market, at least 1 to 2 trades per market on the data sheets every night. So that's what my expectation is for the database from the standpoint of what we're likely to see. 48% is a place to watch. It gets through that, then we're going to be on full alert coming into next Friday. So a week from now, depending on how we trade. I think even if we trade flat or up next week, we're going to see further attrition on the intermediate database. I think it's inevitable that we're going to test 42% and find out what we're dealing with here. And that's going to be a full-out, we get through that, it's going to be a full-out failure from the standpoint of what's going on in the planet. That was interesting. I accidentally hit my keyboard. Didn't know it. Okay. All right, so let's move on. Let's go to, so I'm just accidentally going to crude oil because I had it on the screen here. I do want to show you something. Matter of fact, we'll just cover crude first here. Look at this bubble. Remember the other day I told you about the volatility bubble? It has to contract before we find out what's going next. Look at the red dots. They're completely flatlined. And right now we're looking at the market trading at 95.07. That's down $1.32. And these volatility lines, or the the orange lines are the extreme projections for that day, for today. And that's coming in. We should start to see them angle and start to contract around prices next. By Monday, Tuesday, we should have a handle on how far this market, whether it's going to retrace and break out. Typically, we're probably looking at retracement, maybe even coming back to $83, $84. Those are not good numbers, right? And I would just tell you, since we're doing this, is that and you'll see this in the report as well, is I think we're going to be, we were $50, $60 regime going back several months, and for a while, I think we've got maybe an 80 to 100, 70 to 90. Prices are going to stay up for a while. So there's not going to be any reprieve. So next time we get the PCE or CPI or PPI, any of those numbers come out, they're going to look a lot different next month. Everybody knows it. That's why no one even cares about the numbers that came out this week. And so just know, and I know intuitively everybody has to know that. If you don't know it, then you've been asleep for a week and a half. That's what's going to happen next. That's why the 10-year, which I'll cover in a few minutes, is where it is. So let's go ahead and get back to our normal flow that I usually do. So let's take a look at the S&P. Algos are suggesting that we're stabilizing. And where are we? We're right by that 200 that I was talking about last night. 200 is got, if we go down here, is still flowing negative, but at the moment, it's got enough angle of attack. We should hold support here. I don't expect it to break. And last night I talked about it holding this level and start challenging, we'll call them fan lines. So each one of these, like the white line is the 10-period SMA, 21 and 40. We should actually just start to challenge these lines. We should stay in that wedge that I talked about. So nothing's changed there. The only reason why I brought up crashes is because of my silly superstition on Friday the 13th. So, and I don't remember, I could tell you about the crash of 87, but 89 was, that was driven actually by IBM and white collar layoff. It was a very interesting moment in time. Because usually layoffs in the economy is blue collar, industrial workers, blah, 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 construction. This time IBM laid off. It wasn't only IBM, but they led the way. They laid off the people. And my comment when that happened is I go, you're looking at some of the smartest people in the world, and that's going to be the next level of new tech companies. And guess what? You could look through all of the tech companies that came around in the early 1990s, and there's IBM executives and engineers and people all over those, starting at Cisco on. So it just was, they just migrated everybody out of IBM so they didn't have a boss to tell them it was a bad idea anymore. So yeah. Yeah, so Floyd's talking about XLE. The difference is we're trading the components of XLE. We led the way. ETFs are just baskets, right? So what we did is we rebuilt the XLE. So hopefully I'll get a chance. If not, I will make sure I show it on Monday nights. But yeah, so it's much different when you hack it and you start to pull individual stocks and you can pull triggers within. Yeah, so waiting for XLE to move, it's like an index. It's another dog with fleas. Okay, so yeah, so we're seeing somewhat of a bottoming pattern. We're coming into mid next week before maybe we see this. All I'm telling you about my little superstition telling stories tonight is that it's just kind of that intuition that, and it's funny because I always tell people it's funny that I write newsletters. I tell everybody, be careful what you read, you might believe it. So, and that's still the case. So that's why I have handled myself on this channel like I have for a long time, because I'm not a hypester. This is what we're seeing on the charts. This is what the database, I'm all data driven. I've got quant. We've won hundreds of billions of dollars through our software. So I'm bringing that environment to you guys and talking to, just like if you're, I've got a manager who's got $8 billion in his book. You know, they've got a huge company, offices all over the country. And, you know, you don't talk to them, there's no hype. It's all serious. There's literally hundreds of thousands of customers. So the real people's money. So, you know, there's a much different, I always have brought that, tried to bring that tone and calmness, because it's like, like a football game. If you get emotional, you lose. I'll do a Coach Sig quote. He goes, if you want to be elite, you have to act elite. And, you know, when money's real, you look at it differently. And that's what I found from the retail community that are in this room, along with other folks, is that it's your money. You need to pay real attention. And I know you do. I've learned a lot from watching and interacting with people that are in this YouTube network. I mean, there was a time before I shut it down multiple times the last couple of years because of family issues I was dealing with. You know, we were punching 20, 30,000 views on a lot of videos. And so we were up and coming. I'm actually one of the top 25 in Substack Financial right now, last I looked. So, but the point is that we're trying to evaluate what this stuff really means. And so I didn't just tell you in this last previous 36 minutes to panic sell because the market's going to crash. Did not say that. I was telling you stories about market crashes, and my intuition is that the markets aren't being very forthright with what the environment is printing, because we're so used, and I talked about this the other night, we're so used to looking in the rear view mirror, looking at these stupid reports that came out today. You know, what is this? What does a CPI or a PPI report from last month have anything to do with today? Absolutely zero. The numbers that we see from what is happening today, we see next month, it's going to be an oh crap moment. Okay, like, oh, maybe that's worse than we thought. But it's always that rear view mirror. And I went off on having real time statistics and all that. And, you know, like, at least since I've added the algos to the indicators and the moving averages, at least it has a sense of maybe where we're going. There's still some evaluation that has to happen. And I try to do the best when I'm up here every night. So I spend an hour with you folks, at least four hours a week. All right, so let's take a quick look at the weekly chart. We'll do the same thing for the NAS, and I'm just going to try to get through all these numbers. This is a bit more concerning. So I want you to look, when we're looking at the daily chart, we're looking at the 200. This is the other thing. It's sort of like the scaling on a chart. Let's say if you have the scaling, so the chart's so small it doesn't look like it's moving. If you start to open up the scaling, you can see to a point you want to see that noise and those formations that are happening. Well, when we go to the weekly chart, the PPM1 is a negative 0.28. And that is in full trend mode down on an intermediate basis. And part of this, and none of these meters are moving down here, meaning that we're going to stay negative. So there's going to be way more downward pressure for the first time. And this just started evolving over the last maybe 3 to 4 weeks. We were still in good numbers. Let me see what this number is roughly. Yeah, so we were still positive like 2 weeks ago, and this is what I'm telling you. Things are breaking down fairly quick. We have some Fibonacci targets down here I'm zoomed in right now, but let me, yeah, so downward Fibonacci targets. Right now we've already went through the 6614 level, but 6450, 6349. And these are new numbers that came out just this week, okay? So this is the deterioration I'm trying to paint for you. And I'm not saying panic. You probably all, if you're trading individual stocks, if you're an index trader, that's a whole different thing. But if you're trading individual stocks, you're running your 401k, you're doing that type of stuff, different mentality. But there's definitely signs that we're seeing not only cracks. I think tomorrow night's run, I'm very anxious to see what kind of numbers come out and see if we literally get 2, 3. I've seen as many as 5,000 exits in one run on the models. So tomorrow night we're going to run 14,000 models on both our more aggressive model and our primary model, which is 1.2 or 3.2 is the primary. That's the most accurate model over the larger spectrum of the database. But if we start to see that thing falling apart, then it's just more signs of what's happening, and that this is something, we'll call it the war effect, but this is something much bigger. So, all right, so let's go ahead. We'll start with NASDAQ, and NASDAQ is, let me zoom out. NASDAQ here is right now 0.07 on ppm 2. ppm 1 is a minus 0.30. That's trend mode down, okay, on an intermediate level, on a weekly level. And if we see this liquidation happening, we've already full liquidation mode in the short term, but if we see that contagion falling over to the intermediate models, then what you're likely to see is bigger moves, more substantial moves. I should look at, and I will look at it in a minute, but this is, so the indicators are signaling that we're going to stay negative for multiple more weeks, which makes sense. And maybe we get some relief rally or exhaustion sell-off that would get a bottom in the markets. But we had these previous downward targets here, by the way. Let me just move this so we can see these numbers. 20,000, this is NASDAQ weekly, 20,518. Hang on, I gotta get this right. 18,300 and 16,917, which takes us all the way down into the range of the 200-week moving average on the NASDAQ. Don't think that happened, but the probabilities are out there, okay? And anybody knows anything about the markets, there is nothing guaranteed. There's probabilities of things happening. Probabilities are stacking negative, okay? That's all I'm saying here. Not saying there is going to be a crash. I was talking about the crash. I've lived through 3 of them, I guess, in technical crashes. The 2020, which was a quick, when they did the rug pull there, but 87, 89, and I started in the markets when right after Jimmy Carter left office, and the Dow Jones hit, I want to say 480. You could look it up, but it was 1979, early 1980. The Dow Jones was 400, not 50,000. Of course, the constituent, all these indexes, by the way, they're constantly dinking with them, meaning the constituent list doesn't look anything. It's not the same list of stocks in the Dow Jones. And the goal of McGraw-Hill, who runs that, is to always make the Dow Jones look good. So they're going to rotate stocks in and out to make it look good. S&P, McGraw-Hill does the same thing with the S&P indexes. They tend to rotate them out. They're somewhat we'll call it the primary driver is, the capitalization in the stocks, but there's some other stuff. And then the Dow Jones has the multiplier, which is the real witch's brew in that index. All right, so let's move on. Let's go. I would just say this about the Russell. I said this last night, is it's completely lost. The whole rotation trade is over for the moment. Maybe it comes back. Maybe that's the leader. But right now, like I said, the stack I was telling you, mid cap's up 1.2, Russell up 0.3. All the rest of the index is down 2 to 4%, with the NASDAQ being down 4. That number is going to get worse, I would suspect. All right. Let's go to the 10-year real quick, because what's going on here is also very interesting. Bear with me while I get this thing blown up. I think this is reasonably interesting. I told you when we get these downward, down into 390s and 360s, that wasn't likely based on what was going on. But we can see the red dot is projecting up. Let me zoom out so we can get what this price is. It's projecting into about 430, and we have Fibonacci targets on the upside, which I haven't talked about for a while. And those are, I'll blow them up on the right-hand side. I'll slide it over so you can see it. 469, 497, and 515. We've had similar marks in the history going back. There was a time when we were forecasting 530 up into 6 and 7% over here, but we've had similar prints right here at around 5%, 5.10. Don't know that we go there, but if crude oil stays here, and I do need to say something while I'm here, and I think a couple of nights ago my Substack was titled, "Don't Expect the Fed to Bail You Out," and of anything here. There's nothing that the Fed can do for rising inflation right now. They could raise rates, nothing, no one's going to care. Raising rates isn't going to stop inflation. It's never been a good tool for that, especially when you're dealing with a major commodity. Now let me back up. The major commodity, crude oil and energy prices going up. What would you think the Fed raising rates, what would that do? So do you crash the economy to get rid of inflation? That's not going to work. That's part of their job. Remember, Powell always reminds us we have a dual mandate, stable prices and what? Stable labor. Well, if they do that, they blow up labor, so they can't execute. There's nothing here. Powell's on the way out anyway. I have no idea, other than getting this war over and dealing with new prices. The only thing, and I discussed this a bit in the special report, is that you're going to have to offset whatever's about to come at us, whether we have elevated years of inflation or not. The only way to offset it, I was going to sound like Kathy Woods for a moment, is you've got to get productivity and innovation to cause deflation in prices. And all that's going to do is probably balance out. I gotta see if I can find something here. Yeah, perfect. This is kind of a scary chart. I'm going to go off screen so you guys see this. Oh, I forgot. So this is the indicators on here. It shows we've got a potential of this is core CPI over the next couple months heading towards only 257 is what they're going with here. But look at these fib projections that came out of November of last year. 7.84, 10, and 11%. That's higher than, I'm pretty sure that's higher than we've ever been. No? Oh, no, it's not. Back when I started. So this is what this chart looks like. Bear with me. I didn't expect to go here, but I want to go here. All right. So this is 1975 and the projections. Let's just go back. And then this is 1982, where when I grew up at 5% when I first came into the markets. And so we're already went there in 2020. So now we've got this red line is what I call the pivot line. This comes when you put the Fibonacci projections, the WaveTech Fibonacci projections. Whenever you get a dot line that up or down that covers, those are pivot points, and it's also can be the ceiling. That's 4.92%. All right. All right, so I wanted to show you that. So could we be going to 4 or 5%? Very much so. That might be what we're doing. The algos are showing right now that we probably end up over here at 3.5, and then it's showing coming down. And that may be the duration. That is August, 1 year from now, August. So it would be August 2026. I'm sorry, 26. So they're saying that by August 26th that would be where we would be. So there's a lot of stuff. Like I said, as I dig through, as most of you know, I don't premeditate. I usually go through live analysis and let it take me where it does. And these big high projections, probably not likely. Let's look. We can see we've got a little upslope. So there's definitely, all of the algos are telling us that there's going to be upward pressure. We already know it, right? $98 oil, we already know this. We also know it's probably not, if it prints 75 again, we'll be lucky. But it's just going to get it's going to stay elevated. And that's going to mean a whole different scenario that we have to paint out from a macro environment. So, and guess what? With rates starting to print up, if we did print 5% on the 10-year, that there's nothing good out of this environment. So I didn't know I was going to be so negative tonight, but it's just those are the realities of where we are. There's good news. There's still good support. We've got friends that are willing to pay up 28 handles on the S&P yet. So as long as those guys are around, that's good. We like them. We love them. Thank you for taking the risk and putting money to risk. Now, how long are they going to stand? Maybe 15 minutes. I don't know. So anyway, all right. Where are we at? We're at interest rates. Let's do gold, which is another. Let's see if we can get zoom back in a little bit here. So gold looks like some some negative markets coming. What does that mean? Higher interest rates, maybe, huh? Usually gold doesn't do well in higher interest rates. It did over the last couple of years, but there were different scenarios. I think where we're at right now, we're starting to see a serious potential decline in the metals, and gold in particular. To me, gold's all that really matters. I know there's a whole clan out there on the silver remonetizing, blah, blah, blah. But what this is telling us is that there's going to be a big adjustment coming. Maybe back to the 21, I talked about this, but none of that looks good either if you're a gold player. So I'm going to leave just at the weekly. I'm going to do silver as I want to finish in 5 minutes. Hang on. That is not silver. Here's silver. So this is the other thing that I've been harping on you folks about, is that big bubble, this big spike that we're going to stay within the market grid. Market grid was going to collapse. Now we've actually got a downward channel forming. And if you look just at what the algos are saying, this will change. But we're looking out 150 weeks in projections here. So most of it's bogus, but it is telling us that we're going to stay within this structure here. So the good news is we got positive angle of attacks on all of these averages on the weekly, but it's going to be just the inverse of what I showed you on Bitcoin, which we'll go through here in a minute, but it's going to be the inverse of that. And what it's going to be is that we're going to come down, we're going to hit support, we're going to bounce up, and it's going to go chunking down into third, fourth quarter of this year. Then maybe we'll see what kind of formation, what kind of stability, what numbers are coming out of this once we get some real data to fill in this gap between where we're being projected and what's reality. But silver, gold's got actually the weaker pattern all of a sudden, but it's only going to be weaker down to some of these support zones. We're still at, on ppm1, plus 1.5. So the probabilities, we're trading under this, but the probabilities of getting under the 21-week moving average right now, which is currently, I think I can pull it up here. I need to figure out if you can configure what comes up on that window. But that's 71 bucks, and I've been painting this picture. 71.95 is probably your range in silver. Okay, let's do Bitcoin. It's actually acting pretty well. Got a little weakness with some of the markets, equity markets kind of affecting sentiment, but it looks pretty good. I think we're going to go through that inverse cycle where we're going to test the 10. This is weekly, test the 10 week. Looks like the algos, the red dot is showing that we're going to test that. The algos down here suggest that by the end of, by the end of this month, we should be in position to start to challenge that 10-week average and maybe start to move up. But everything ends up 81, 84 is probably max for a bit. So every time we get up, let me go back daily just for a second, and then I'll come up and answer questions. Looks like you guys have been busy tonight. So yeah, so this 40, I went to monthly. I was supposed to go to daily. But 40 month is solid too on Bitcoin. So there is total support here. I don't think you take out 60. Here we go. This is the fib targets, and this kind of lines up with the weekly charts that we're probably going to challenge in here. Get up to about 75 to 81 is going to be the range where we're probably targeting right now. All right. All right. I'll come up and see what you folks have been talking about. Yeah, they always check our gas here. Hang on. Let's see what. Okay, that's since March, Friday the 13th, February 19th, last day up during COVID. All right. And let me look through some of your questions here. Oh, yeah, Bo, those are the, you're talking about the bigger numbers down below the main where it shows 1, 2, 3, 2 daily, weekly. Those are the cumulative, all of the cumulative buys and sells over the last 2 weeks. It goes back 2 weeks. Yeah, okay, this is good. Bob, California, 3 remaining large CBX, PFB. The old Getty, is that open? I used to live in the Bay, Walnut Creek side, and go to the city. Interesting. So Cali's the biggest LG user. Good news is we got a lot of that here. And this actually goes to the whole idea of the U.S. being energy independent right now. The U.S. is in the best position to come out of all of this just because of who we are and what we are. Let's see anything else. Yeah, so Floyd's Garage, yeah, the capacity reduction. When you see this report, I'll be interested to hear comments about it because it goes way beyond capacity, what's going on right now. Yeah, dry ship index. Let me just see here, just a couple more folks, and let me just see, and otherwise I'll just summarize what we're doing here. And yeah, so that is the thing Tony's saying about not only can the oil exit, but yeah, places like Dubai, who lives on all the food. I got to tell you, the whole Dubai mystique is over. So I think it's going to have a hard time rebuilding. Ted, what happened to the Gary, Indiana build out? Oh man, they messed it up here. Now that it's still one of the best places to build out if you're going to build something, but who knows now? That's pretty funny. I love it. Okay, yeah. Yeah, I know. I went off on that one night. I still think we'll get through this, and there are a lot of negative people out there. I guess if there is a potential for a short squeeze. So I'll just summarize. I appreciate everybody coming, and I just. My concern is what drives me, this channel, my opinion, my analysis, our portfolio allocations on billions of dollars. All is the database, is the WaveTech and the Portfolio Expert database. Good news is we're reasonably protected. We at least in most, or we're 30%. Some of these ETF strategies, 100% in cash. So if the thing crashes on today or Monday, I'm going to look genius to a group of people out there, okay, that thing moved to where it did. If it doesn't, then it is what it is. But, and I wasn't, it's just really just driven by the numbers. So, but that's everything that drives me. I don't have any other agendas or anything or opinions. My slogan, those people have known me for a while, is it's always been process over attitude and opinions. Attitudes, opinions keep you in the market when you should be out and out when you should be in. So you should always have a process of some sort that's driving, that is, it doesn't have to be total mechanical quant like where I live all the time, but you need to have something that you believe in and that's willing to drive you to do the right things. Because if you don't have that, then you can end up in a very bad spot. And I've seen it more than and not over the years. And I think there's, I was talking to somebody that sold their business, one of my old customers, a couple of weeks ago, and I was telling him, I said, I think that my name's going to come up a lot maybe in the next few weeks. And they'll probably go, gee, I wonder what VPM/WaveTech's doing. I wonder about this. Well, some of them are on this channel, and I appreciate that. But yeah, it's going to be an interesting point in time, because what we're dealing with right now is not over, and it's not going to be over for a while. Like 12, 14, 16 months, there's going to be an effect. I'm not saying that we're going in this monster bear market, but it depends on a few things and how we do come out of this. And by the way, and I mentioned this in the report, is there could be a lot of good come out of this. It could cause things to be looked at that should have been looked at, restructuring of shipping channels and everything maybe needs to be reevaluated. I think there's going to be a realignment of who likes who. And one of the most dangerous things, I'll say this in closing, that's out there is when you start hearing Trump and others saying that, crude oil is, national security. That's a scary statement. It sounds like, yeah, and I agree, but what it does is it sets the tone for much more infighting and brings up a lot of emotion, and like they it can be America first, it can be anything. It gets dangerous when nobody wants to listen to the other guy, and everybody, it's like a scrum, or maybe like a fumbled ball on a football field. You're just trying to get whatever you can get at that phase. So I think we have some serious challenges. I think I would say that I think potentially this is probably the biggest blunder of Trump's entire career. I think going into Iran at this moment in time, when demand of energy has never been at levels where it is right now, and future demand is insane. So maybe we come out of this better. I hope so, because I'm a member of the planet. So I hope that's the case. But I'm quite concerned that because of all the emotion around it and people trying to scramble, if it comes to survival, then that's where I'm talking about that national security edge. It gets pretty ugly, and people start, getting in groups and forming tribes, and tribes are not always a friendly environment. Anyway, I'm done talking. The end of the week. Thank you so much for listening, and hopefully I've helped you guys as much as I can, and you do well. And I will see you next week. Look forward, and I will put the database output out sometime this weekend. All right, folks. Have a great day. Enjoy.